The cryptocurrency market has slipped back into correction territory, with XRP, Bitcoin, and Ethereum all pulling back by roughly 1% today. At first glance, this might seem like a minor move, but the timing and the underlying catalysts are critical. Several major events have converged, events that many have previously described as potential black swan scenarios. When these kinds of shocks appear, they tend to ripple across markets, exposing vulnerabilities and testing the resilience of both traditional finance and digital assets. One of the biggest headlines today comes from the United States labor market. Revised jobs data shows that 911,000 positions were cut, marking the largest downward revision in history. This figure is staggering, not only for its size, but also for what it reveals about the underlying fragility of the U.S. economy. A healthy jobs market is the backbone of consumer spending, confidence, and growth. When numbers like this emerge, they shatter the narrative of stability. The result is an increase in recession fears and mounting pressure on the Federal Reserve to cut interest rates more aggressively. Markets thrive on confidence, and when confidence in the labor market evaporates, the shock waves are immediate. This is not just about numbers on a page. It represents a deeper structural problem, one that policymakers have been trying to paper over with stimulus, rate manipulation, and fiscal interventions. But you cannot mask cracks in the foundation forever. Calls are already growing louder for major rate cuts, and while some, including Trump, advocate for reductions of 50, 75, or even 100 basis points, the reality is that the Federal Reserve is more likely to move cautiously. Most projections suggest a cut of 25 basis points at most, at least initially. Still, the fact that such extreme cuts are being discussed shows how fragile the economic situation has become. At the same time, geopolitical tensions are once again spilling over into markets. Reports out of Qatar indicate that Israeli forces targeted Hamas leaders with explosions in Doha, escalating a conflict that has already destabilized the Middle East for years. Whenever tensions flare in this region, energy markets react, risk appetites shrink, and global capital often seeks safe havens. Crypto is increasingly part of that conversation, but not always in a positive way. In uncertain times, risk assets like cryptocurrencies can be hit by outflows, only to later benefit as alternative systems when traditional finance falters. The Middle East remains a flashpoint for global uncertainty, and today's events add yet another layer of tension that traders must account for. Adding to the sense of fragility, Microsoft has confirmed that several international undersea internet cables were cut in the Red Sea just days ago. This may sound like a technical issue, but the implications are enormous. The modern financial system depends on uninterrupted global connectivity. Undersea cables carry the vast majority of internet traffic, including payments, banking operations, and market data. A disruption in these cables could paralyze communications and transactions, potentially creating the kind of systemic breakdown that some have speculated could trigger a financial reset. This is not a theoretical risk. In Spain, and specifically in Madrid, a power outage not long ago highlighted how quickly payments grind to a halt without internet connectivity. Shops could not process transactions, customers could not pay, and panic spread within hours. Now imagine that scenario, scaled globally due to severed cables in critical choke points like the Red Sea. The possibility of a sudden systemic freeze becomes real. This is where the conversation turns back to cryptocurrencies like XRP and XLM, which are designed with resilience in mind. Some of these networks can process offline transactions, making them potential alternatives in a world where traditional rails are temporarily disabled. Looking at the charts, XRP is currently trading around $2.92, having recovered slightly from earlier lows. Bitcoin has surged past $112,000, while Ethereum hovers near $4,300. On the surface, the market still looks stable, but the backdrop tells a different story. Capital inflows that boosted markets yesterday are already fading, and today's correction signals caution among investors. Altcoins, however, remain in a promising position as Bitcoin dominance shows signs of weakening. Historically, when Bitcoin's dominance declines, altcoins surge as capital rotates into higher risk, higher reward opportunities. This dynamic could be setting up for Q4, even if the short-term picture is choppy. Trump's calls for aggressive rate cuts highlight the political dimension of these economic debates. Markets are influenced not just by data, but by rhetoric and expectations. Even if the Fed ultimately opts for only a small cut, the very fact that political leaders are floating massive reductions shapes sentiment. For crypto, lower rates generally mean more liquidity in the system, which can fuel rallies. But if those cuts come as a response to genuine economic distress, the environment may become even more volatile. The concept of black swan events has been discussed for years in the crypto space. These are rare, unexpected shocks that have outsized consequences. The combination of a record jobs revision, Middle East escalation, and undersea cable disruptions feels eerily close to the kind of chain reaction that fits that definition. Whether or not this moment proves to be a true black swan, it serves as a reminder that the global system is fragile, interconnected, and vulnerable to shocks from multiple directions at once. For XRP holders, the narrative is particularly important. Ripple has positioned XRP as a bridge currency and infrastructure asset for global payments. Its utility is not just theoretical. It is being integrated into banking systems and financial corridors worldwide. In a moment of systemic stress, the ability of XRP to function efficiently, even when traditional rails stumble, could accelerate its adoption. What looks like a speculative asset today could become a lifeline tomorrow. In conclusion, today's correction may seem small on the surface, but the forces behind it are anything but ordinary. A historic jobs revision, renewed geopolitical tensions, and critical infrastructure vulnerabilities are converging to remind us of the fragility of the financial system. As capital flows in and out of crypto in response, XRP and similar assets stand at the intersection of speculation and systemic necessity. Whether or not we see a black swan event in the immediate future, the signals are clear. The global economy is vulnerable, and the assets being built to withstand shocks are the ones most likely to thrive in the long run. And before we wrap up, let me remind you that we're also on Instagram, where I share daily updates and community curiosities about XRP. So if you want to stay in the loop anytime, make sure to follow me there. Also, in the links I've got in the bio, you can check out my book about XRP, either through Hotmart or by simply searching for it on Amazon. And if you want to take things a step further and be part of the inner community, you can become a channel member. That way you'll get early access to the videos I upload, plus a few exclusive rewards made just for members.